Microphone check and screen share check, please. All right. Good evening, Nightly Strategy Podcast for July 7th, 2022. Get started with the market health check. All right, so yesterday we saw that rising low that gave us a 1, 2. So that means when it takes out yesterday's high, as it crossed the dragon, that gives us a 1, 2, 3 entry. We've got the crossing of the dragon. Notice that the RL10 has hooked up, so we're in the spring, and the spring has resumed its upward move. Had a relatively small range day. Short-term momentum is still positive. We've fought our way back to the Bollinger Band mean from a Z-2. So this is feeling like a Kata 2 style entry. Next target would be Z+1. You know, just looking back over here, we have that one daily range right here, and then we have all that gap area. So really, if it can get through like 396, then this is really no resistance whatsoever. This is all gap right here. So if price can get through that resistance tomorrow, then that should go pretty fast. So that looks pretty favorable. Skin of the dragon, Z1, belly of the dragon, and the 5-day low. It's also the 10-day low, PSAR, 30-day low, and 150-day low, and then the collapsing dragon from here. So that's what it looks like to the downside. To the upside, you know, this looks pretty favorable. Not much resistance in there at all. Take a look at the sectors next. So today the S&P had a strong day, up 1.5%. Diamonds lagged a little bit at 1.1. Treasuries were the worst at 0.88, and there were only two symbols in the whole stock that were negative. And that was Mexico at 0.24 and Treasuries at 0.88. To the upside from the market, emerging markets 2%, tech 2.1, and then the best performing sector with the Russell 2.37. All right, underperforming, we had finance and wheat and precious, only 1.45 and 1.2. Materials up 0.9. VIX, the Aussie dollar, real estate, and staples between 0.7, 0.77 and 0.1. Microsoft lagged a little today at 0.82. But that's not much weakness. Today was pretty much a vote to the upside. All right, let's see what worked. Pretty much everything else, right? So the S&P was up 1.5, and we have a cluster here of lumber, agriculture, the other lumber, and commercial real estate between 2% and 1.5. S&P Tech at 2.07, marijuana at 2.15. Let's see, that is Discretionary, FANGs, and biotech between 3% and 2.5%. They have another nice cluster here of Brazil, energy, oil, blended commodities, and lithium between 4.5 and 3.5. Blockchain 5.3. ARC, innovation and genomics 6.5%. Oil exploration, Squarespace 5.6. Clean energy 6.7. Blended large cap crypto 7%. Bitcoin futures and global future of finance 7.75. And then big winners in the Coinbase and Ethereum. Alcoa, really big day. It's been the strongest of the metals. Rivian had a good day at 6.6. Tesla, a great day at 5.5. Was able to break through 700 and close at 733. Devon Energy 5.25. U.S. Steel 4.5. Robinhood 4.5. Cliff 3.5. PayPal and Apple 2.5. So pretty strong day and a wide range of symbols that really outperform. So that bodes very well for tomorrow. All right, we'll go through the daily report now. Sniper trade of the day today was in clean energy. Here was yesterday's close. I'm on the 3-minute on this one. I had a big gap up, which alerted me. It moved a standard risk box off the low. That standard risk box is about 30 cents. So after the first bar closed and still moving up, I buy it with a standard risk. It just locks in gains all the way up. I wouldn't be offended if you took that one. I stuck around for the PSAR and the bottom skin of the dragon for, let's see, 1, 2, 3. Could have had the COTA 2 right here, but I waited for the PSAR to break. Micro loss. COTA 2 resumed. Micro gain. COTA 2 resumed. Micro gain. So really this was about, by the time we were done, this was about 3.5 to 4 on the sniper trade of the day on a resurgence inside energy. All right, dashboard number 1, still bearish normal. The recovery today was pretty good. Risk Z is alerting us to the possibility of the upside. So we've cleared the zero line. Home Depot, Pfizer, Microsoft, Walmart, McDonald's in the min pain. Still some ways to go in Apple and oil and energy. So I will continue to stalk those. Dow Tactical, tons of dojis today. The market was in that kind of mood. 2.6 to 1 in Alcoa, 2.9 in Chevron, 2.4 and 2.7 Johnson & Johnson and Morgan. Strong move in Tesla today. No other real swing patterns of note. In the ETFs, mostly directional moves today of large range, so only one doji and plenty of auto framers to choose from. let's see here, 8.5 in gold, 4 in Europe, 5 in silver, also 5 in oil. I think that's going to look pretty good tomorrow. Metals and mining both had and oil exploration had strong days today. I'd be looking for continued upside. That's why I'm very interested in the steels tomorrow. All right, in the auto framer, for you swing traders one day at a time, here's your framing data in those columns. Here's everything that's better than 2 to 1 on reward to risk. Gold, oil, silver, food, and Europe. There's ExxonMobil, energy, blended commodities. Those will be on my short list, along with XOP, oil exploration. I love Alcoa and U.S. Steel here. Lots of squeezes today because of the small range. Diamonds prominently on display. Today was a big directional move in Tesla, so not a squeeze. But United Health and Healthcare, ExxonMobil, the Dow, Alcoa, I'm liking that, and Microsoft are on my list. Cliff sneaks in there at 2 to 1 also. I like that. I like the squeezes. In the regression line fractals, still liking U.S. Steel at 9.25 to 1. I'm waiting for the inflation trade to catch up here to agriculture. With today's strong upward move, and of the last couple days, only 3 Godzillas in the S&P. And these are all quiet Godzillas. These are the stealthy Godzillas, right? And no Godzillas in the tactical set, so the market is healing. That's a sign, actually, right? Fireworks, there's a few in the S&P. And these are ones that have been dramatically outperforming near the top of their trading ranges, but have generally been very quiet lately over the last 5 days and 1 day. So these are things that have extraordinarily moved to the top, and then for 5 days in a row have given very quiet ranges, including the last day. So is it going to break out or break down? We don't know. But that relative strength makes them attractive as a temporary pause and continuation. By the same token, if it doesn't follow through and you start seeing some weakness, then these become candidates for people to preserve all the gains of the very strong move that took them to the top. So that's what makes this a critical state. Only Alta as a fence sitter. And you can see the S&P's most quiet and most volatile on the basis of the 5-day volatility Z-score. I'll let you hunt. Here's the sniper auto framer for our tactical symbol set. I have this sorted by percent changed, and you've seen that one already. A lot coming into the spring now, very few left in the summer whatsoever. So I would be looking to favor these, and those in the spring that are especially strong, like tech. And then any recovery rebound in treasuries would be good. There's your Microsoft, Walmart, McDonald's, Coke, and United Health. Clear winners. You can see how energy is really lagging still. Energy still suffering. Here's the tactical symbol set with the sniper stats sorted by the 5-day volatility. The blended commodities and agriculture have the largest 5-day volatility and have sold off over the last 30 days quite a bit. Lots of 2-day breakouts today on the 2-day NDX on both sides of the aisle. Only Treasury suffering today. You will recall 4 days ago when we said, here's that doji right there. After this little rebound and pullback to a doji, that put this in a critical state. Which way was it going to break? It's breaking to the upside. Now, this is right at a crucial price level. The last place that it stalled and failed right around 390. Last time it came all the way back to here. So you're not allowed to be surprised if it does that again. But just like we said here, this gap could be eclipsed pretty quickly, and so that could take you to 410, which is plus $20 on a $400 ETF. There's a 5% gain baked into the cake right here. The downside, taking it back to 370, is also a 5% move. So that's what that's like. All right, that's everything we want to cover on the daily. Do some quick sniper trades of the day. This is clean energy. We saw that one already. This one was gap up and go like a rocket ship. Standard exit. Kata 2 reentry. Quick loss. Kata 2 micro gain. And then another Kata 2 micro gain. So pretty good day, about 4 hour. Colgate Palmolive. This one gave me an alert for big gap down and harsh sell-off. So we got the standard risk box on this one. So there's the close yesterday. Here's the gap and harsh sell-off, standard risk box. By that time, you've got to get your stop has got to be from here down to here, maybe even to here, and lock in those two chunks. Continues to fail. Standard exit 1-2 at the edge of the dragon. So standard looking trade. And Colgate Palmolive. SSC standard risk. Quick loss. Reversal short on the PSAR flip. Standard exit for 1.5. That's a stop and reverse at the SSC. Scratch exit goes short again on the PSAR flip. Pretty good payoff, about 1 R. stop and reverse swing, SSC, I should say. Second position on the second K2. Very good payoff going towards the close. So that was sort of a model trade in CL. That's Colgate Palmolive in the healthcare and staples sector. That's another one of those great big wonderful American companies, mature technologies that intraday with our techniques look like they're little growth stocks. You can they're very liquid and they move in an orderly fashion, and there's an implied safety to them because of the size of the company. All right, here's Microsoft. This was a morning hook, crosses the dragon, hits the PSAR, so we get long. Standard risk of $1. About 1R, taking the PSAR exit, missed the short, took the COTA 2, it just never followed through, and there was a micro loss on that thing. So maybe 1R on that one. Rivian. This is the electric car company. The Tesla alternative. The opening range breakout to the upside above the dragon. It's starting to move out. The market's doing well. Standard risk, so lose 1R. Shoot. Missed the short. Missed the COTA 2. Took the second COTA 2. Standard risk. Paid about 1. COTA 2 re-entry. Paid about a half. So kind of a grinding. Tesla. Strong move off the bottom. The opening range breakout plus a $5 risk box. Standard exit at the PSAR. COTA 2 standard entry. Standard exit at the PSAR for about 1. So that's about 2R in Tesla in the usual way on the 5-minute charts with simplified indicators. Not even trying to optimize. Cliff. Standard risk is 20 cents, the yellow box. The opening range 5 is monkeying around. Waited for it to break down through the edge of the dragon and hit the PSAR. Got short. It reversed really sharply. So I stuck around too long and scratched. Gave back a full R. Felt stupid. Took the violation of the dragon short. Gave it too much room. Took a third of an R loss there. Let it come through the dragon. Much too much given back. Realized I'd missed the short. So now I take the SSC in the standard way. Standard risk. Finally behaves well. Take about half an R gain. Pretty much that felt like about a scratch kind of day, or maybe a half an R. Next one up is Treasuries, 20-cent risk box. Rolls over first thing in the morning, breaks through the dragon short with standard risk. It breaks below this little cluster. Treasuries are such an enormous market that when these support levels break, that's a sign. And then this broke the belly of the dragon, so this is a CD and it breaking the shelf, and 1R with momentum in hand. Little shelf being built. And everything was working on the upside in the market. Only Treasuries in Mexico were down, so I took this one as a second, almost like a Darvis box. Um, third position short. Another shelf being built. And each one of those is about a standard risk box of noise, and when it violates, I just add. So now I'm 4 positions in. So this first one is 1, 2, is +3. The second one is +2. This last one is about +1. So we're holding about 6R here as we put the 4th position on. And then that's a quick scratch, and I'm all out, thankfully, and missed the short the second time. All right, so that's about 6R in treasuries. Here's ARE. Oh, that's our little healthcare real estate guy. Risk is about 50 cents, standard risk. It was like a morning hook. It had closed here, moved up through the dragon, standard risk box off the bottom, long, looking for that. Quick scratch, caught a 2 re-entry. Looking for that with standard risk. That one paid off for about 1R on Dragon rolls over. That's looks like an owl entry on the short side for about 1R. Second caught a 2 re-entry for about 1R. So in a quiet, orderly way, that was about +3. And it was interesting how symmetrical this thing was and just rolled over. And there's leg 1 and there's leg 2. So ARE, that's our little healthcare real estate guy. Now, it's unusual that we've been making money on the short side on that one, so that it may be that it and Peak are both have had their fun in the sun. So if we want to go back and look at ARE on the swing, yeah, so here you can see, so these are dailies. This is the move downward that made it Godzilla, and that was sort of the turning point. And 1, 2, 3 entries here. The SSC is here. So this thing has now enjoyed leg 1 and hold, leg 2 and hold, and now it's getting ready to come into all of this resistance. Leg 1, leg 2. So now this is, I'm ready for this thing to just do another one of those long consolidations after that layout. Yeah, that's the same sniper layout that I use for the intraday, and when we leave it on the daily, it really does help you see why ARE is such an interesting little guy. Look how long those trends are. And what makes this one, so this is that first trend off the bottom. Remember, that first move here was the last half of this trend, and now the second leg was the first part of that trend. So this thing could still, if you take a look at the length of trends, I mean, this thing could could get up here and test and might even get up to here. It would be a real stretch to get to 200, but wouldn't be offended. We're going to see the same thing in his running buddy peak. This is what I mean by the fractal nature of these layouts. So yeah, you'll see peak has the same kind of feature. This harsh sell-off, pause, sell-off, that's your resistance right there. And there's leg 1 and leg 2. So now the question is there any juice left? They were both down today 0.5% on a day when everything in the market was up. So that's why I'm a little hesitant about this. This feels almost like it's done. So I'll still try them on the intraday. But if you had invested any of the intraday gains here as part of that swing, and especially if you took that as the swing, I'd be really careful keeping this thing locked in, because you can see how fast this thing loses when it decides to collapse. And that's a profit worth preserving if you were the guys that were buying it down here. So there could be some selling pressure to preserve profits pretty quick. So I think I wouldn't let this get below like 26, like the edge of the dragon. Like I think I'd be there, or even the 2-bar low. And depending on where your entry was in here. Oh, let's see. Go to the boys now. Let's see what we got. First of all, Paul got paid today. Good. This one was going in his favor, but he made sure that he didn't lose money on it, so he even made a taste. 1, 2, 3. Here's like a 1, 2, 3 entry that he played just crossing the dragon. Missed the re-entry. Now, didn't want to chase. See, because I think this was so early, that's the official entry anyway. You're not chasing anything. In fact, when it gets through the dragon, it is just beginning to emerge. And, under best practices, you'd have gotten maybe that trade. Then he plays this one on the rebound. Quick scratch. This one could have been literally 1, 2, 3, and either been here or here or here. Any one of those 3 entries would be okay. Still got paid. That's a great exit. It doesn't even fail through the dragon. Quick scratch, quick scratch. Here's your PSAR flip. Short. That was the easiest trade of the day. Rolls over almost like a collapsing dragon. He's front running the true collapsing dragon. This is like a K2. Quick reversal, well played. Gets the PSAR, gets paid. This one, you want that re-entry here. So that's a pretty good day. I would just study this one psychologically, that you were not chasing on that one. That's the normal entry. Paul with Tesla. Got paid. Here's your PSAR flip. And just starting the day. Opening range breakout. Got paid. Good re-entry. Scratch, scratch. Probably, gave back 1. This probably could have been here. And that would have been a scratch. I like the short. Good scratch, good recovery, and stuck it out very nice. Notice how orderly that move is. That's Tesla on threes. Yeah, to me the fives were a little choppy again um, today. The threes is my preferred. Griff on the SSC only, and this was from yesterday. That's correct. Let's see. Yep, that's correct. Good Kata 2 reentry. I like that. Still looking for a. Well, we would see him pick this up as a Kata 2 reentry in the normal way. And then all of these are SSCs and Kata 2s. And on his integrated chart, yeah, you see he gets all of those. That's why you want to know all three of those patterns. 3.5. Now, he and Phil Wu have put together a TD Ameritrade version of the OWL pattern, fully implemented with indicators and strategies and reports and techniques and sample trades. I think we're going to release that at the end of July. I got to just go through and validate the trades and whatnot. But I'm excited to see students becoming teachers. That's sort of what I live for. And so I'll be sponsoring that course for them. And I believe they're interested in being available to coach for folks that are interested on the Ameritrade platform. All right. This is where the entry could have been. That would have been a scratch. Still not bad. Quick exit. This short, I think, could be here because that's where the PSAR box is. Yeah, that makes you scratch. And then the re-entry had some troubles. Here's your long side PSAR box right there. Good re-entry. Stuck around too long. Good short. Good PSAR flip. So now we're getting better here and here. So some inaccuracies early, but you got out of it with your skin. Tesla for one in the usual way. Good work. Here's Jack. This is Tesla on the threes. Here was that OR opening range 3. Nails it. Gives back a 1-2 exit for 3R. Stays out of the chop. Waits for the breakout to an intraday high. Takes a quick minus 0.3, total 2.7. Very nicely played. Good work. On Alcoa, he gets the gap up. Opening range 3. Plays the long side. It rolls up. That feels like it gave back too much. When you see all those open and closes right around in here, that's telling you that's a significant price level. So when this rolls up and then fails back here, you just got to figure out there may be an exit rule that instead of exiting here, allows you to exit somewhere between that key price level and the obvious. Maybe it's the skin of the dragon. I don't know. This was tempting to me on this breakout, this emerging dragon breakout, especially when this price level was rewarded here. I think that one paid off too. But I think you were already out of the market by then. Here's Luke with the 5-minute Aussie for 6.7. Gets the turning point. There's your P1. Crosses the dragon. Standard wrist box. Z3 excursion. 1, 2, 3. I'd like to see out here. I wouldn't be offended on that, especially getting paid early in the day after 2 bars outside the Z3 that rolls over. Why not take the gift? The PSAR flip box short, a little bit slow, so it probably should be a scratch. Re-enters the, just keeps firing, re-enters the CD, crushes it. Here's our little pattern again. That quick shake, and now notice the CD here. It's probably in here. So we could have gotten a second position here or here, but great exit. Maybe a little slow on the SSC. Like that should actually be like right here. But I would take any entry in here as a slight improvement, but that's not bad. Now here's that little shimmy again. So there's a potential second entry here. And then when this runs up to Z3 and then rolls over, take half. That's a pretty good day for 6.7. All right, for Tim. That U.S. market open, when it consolidates and breaks out and you have the PSAR break, that's why we want to trade that. There's your move. This is a good short. This is a good PSAR flip long. I'd like to see you somewhere, if we're 5 bars into that thing, by the time it's here, I should be at no lose plus dinner for 2, and I'll get paid. And that's the difference, between a scratch and a 0.3, which turns the day positive. But that's the trade I want you to get. This is a little slow. Now, Tim, you asked me about, sometimes the, price moves through the PSAR and hasn't always slipped. Check on your platform. If you can project the PSAR forward one time period. So here's what happens. Here's the descending PSAR, and the price. And so this open circle is where that PSAR is going to print probably, and price is moving up through here or not, and maybe wobbling back and forth. Is it going to hit it or is it not going to hit it? And then when it closes, then the PSAR dot prints, and then it looks like, oh, I missed that. So there's 2 ways to handle that. That'll just stop you from thinking about it too much. One of them is project the dot forward one time period, so the whole thing shifts over one. And that way, whenever the bar is live, there's always a PSAR dot already printed. So if your platform will allow you to do that, by projecting it forward plus 1 time period, you have the last bar's PSAR already in place. And then if the price goes through it, there's no question that it hits. The second thing you can do if your platform won't do that is just as those bars are coming down, and then here's the live bar, all you do is you just say, look, I'm going to take the previous bar's PSAR dot as my limit. And if that thing goes up through here, I'm just going to get long. But not until it does that. If it does, it goes through there. Then wherever this thing ends up closing, you end up getting what turns out to be pretty close to the PSAR entry anyway. So I wouldn't worry about it too much. Just that may be the easiest way. Just take the previous PSAR dot as the signal, lagging 1, if you will. I like to push it forward 1 when the chart platform allows you to do that. And then what it does is it just it doesn't make a big price difference, because if you look at how close these little PSAR dots are, it doesn't matter that much compared to the size of your wrist box. So it really doesn't matter. It's nothing that you want to spend brain power on. So just do it. Just try that. All right. Let's see. MCL. So here's the oil. This is like COTA 2. So we should be exiting here and being short right there. That short, as opposed to being short here, that you get to cash that whole gain. This is a good long. Now, when we're that far in the, we got to at least scratch. This is a good COTA 2 reentry that got paid. This is the time of day when oil's making the biggest moves. So study the timing of the day on that. That's when that U.S. market, I think, is working hard. And then when you take a look at that trade, you'll realize that you'll be strongly positive for the day. All right, that's everything we got for today, guys.